Dear viewers, welcome to my channel. In this video, a problem will be solved on conversion of single entry into double entry. Kindly watch the video till the end, share among your friends, like it and subscribe to the channel. If you already subscribed, kindly ignore this. If you have any comments, please put your comments in the comment box. Now, let's move to the whiteboard. This is a problem on preparation of final accounts under single entry. So I have taken a question from the question paper which has appeared for the year 2011 of Ranicharam University. Mr. Mohan, let me stretch this. Mr. Mohan Rao furnished the following particulars. So here it is A, assets and liabilities. Here it is 1/2011, 31/12/2011. Cash in hand rupees 1,000. Closing balance is rupees 3,000. Bills receivable 25,000, then 35,000. Debtors rupees 40,000, 50,000. Then stock 70,000, 75,000. Plant and machinery 40,000, 40,000. Building 60,000, building 60,000. Creditors rupees 36,000, 40,000. Bills payable rupees 20,000, rupees 25,000. Capital rupees 1,80,000, 1,80,000. Here it is nil. So the next one, B, cash transactions during the year. Receipts from debtors rupees 2 lakhs. Then receipts from bills receivable rupees 1 lakh. Payments salary 10,000 rupees. Then wages rupees 15,000. Then bills payable rupees 1,20,000. Rupees 1,20,000. Then creditors rupees 1,40,000. Rupees 1,40,000. Then general expenses rupees 8,000. Drawings rupees 5,000. Then C, other information, discount allowed rupees 2,000. Discount received rupees 1,000. Provide depreciation on plant and machinery at 10% and 2% on debtors for doubtful debts. Prepare trading and profit and loss account for the year ending 31st/12/2011 and balance sheet as on. So when we go through this problem here, we have not provided with the opening capital. So for that reason here we need to prepare the opening statement of affairs in order to find out the opening capital. Then similarly we need to prepare the bills receivable account to know how much amount of the acceptance is received. Then we need to prepare the total debtors account to find out the credit sales. We need to prepare the bills payable account to find out how much acceptance is given. Then we need to prepare the total creditors account in order to find out the amount of the credit purchases made here. So now let us go for the solution of the same here. So here Mr. Mohan Rao's statement of affairs as on 1/1/2011. So sorry, opening capital is given here, so we need not go for preparing the opening statement of affairs here. So we need to prepare directly bills receivable account. So debit here, bills receivable account. Bills receivable, let me insert a table here. So particulars rupees. So this will start the opening balance here. So to balance brought down. So the opening balance brought down here, it is rupees 25,000. Then when the cash, when these bills are honored here, then the entry will be cash account debit to bills receivable account. So bills receivable account is credited by cash. So it is given as rupees 1 lakh. Then the closing balance is given here. So by balance carried down. So here the closing balance here, it is rupees 35,000. So the total, let us take here. So the credit side is more. So total rupees 1,35,000. So let me write down the same thing here, 1,35,000. So the difference here, it is 1,10,000. So this is nothing but 2 debtors here. So 2 debtors in the bracket acceptance received, balancing figure. So similarly we need to prepare, so let me make these things bold here so that it will be distinct from the other amounts here. So the next thing that comes to here, preparation of total debtors account. So debit total debtors account, credit. So let me insert the table here. So particulars rupees, particulars rupees. So it will start the opening balance. So to balance brought down. So the opening balance of the debtors, it is given here as a 40,000. So then when the cash is received from the debtors, then it will be cash account debit to total debtors. So total debtors is credited by cash. So the cash paid here, it is given as rupees, received from the creditor of the debtors is given as rupees 2 lakhs. So 2 lakhs. Then when the bills are accepted here, so acceptance is received. So by bills receivable, so that is 1,10,000. Then when the discount is allowed, then the entry will be discount allowed according to total debtors. So total debtors is credited by discount allowed. So that is rupees 2,000. Then closing balance. So by balance carried down, rupees 50,000. So here it is the total we need to take here. So credit side is more, so total here that comes to rupees 3,62,000. So let me write down here also. So total 3,62,000. So the difference here is we are going to have 3,22,000. 22,000. So this is nothing but the credit sales. So to sales in the bracket credit. So here let me write balancing figure. So this is the amount which we have found here by preparing the total debtors account, which is nothing but the credit sales achieved during the year. Then similarly we need to prepare the total, bills payable account. So bills payable account, So let me insert a table here. So particulars rupees, particulars rupees. So it will start with the opening credit balance here. So by balance brought down. So the opening balance here, it is given as rupees 20,000. Then when the cash is paid, here, then the entry will be bills payable account debit to to cash account. So that is the cash paid here is rupees of 40,000. Then the closing balance, so to balance carried down, so that is given as rupees here the cash paid it is given as 1,20,000. So 1,20,000. So the closing balance it is given as 25,000. So 25,000. Then now let me take the total here. So total 1,45,000. So let us write here also total 1,45,000. So the difference here is 1,25,000, which is nothing but the acceptance given to the creditors. So by creditors, when bills are issued to the creditors, then the entry will be creditors account debit to bills payable. So here it is balancing figure. So let me make this amount as a bold here so that it can be distinctively seen here. Then the next one here, preparation of a total creditors account. Creditors account. So let me insert a table here. So particulars rupees, particulars rupees. So it will start with the opening credit balance. So by balance brought down. So the opening balance brought down here it is rupees 36,000. Then when the cash is paid to creditors, then enter the total creditors account debit to cash account 1,40,000. Then similarly, when the bills are issued to the creditors, bills payable, total creditors account debit to bills payable account. Bills payable account. So the amount we have found here is 1,25,000. Then when the discount is received, then the entry will be total creditors account debit to discount earned or discount received. Discount received. So that is rupees 1,000 here. 1,000. Then closing balance to balance carried down 40,000. So the total of this will be 3,06,000. So let me write down here also 3,06,000. So the difference here is 2,70,000. So here by credit purchases or simply purchases, by purchases in the bracket, let's write here credit balancing figure. So this is we have found 2,70,000 as the amount of the credit purchases here. So in this one we are not given any cash purchases here. Even if it is given, it will not come here. So the next one here is we need to prepare the trading and P&L account. So Mr. Mohan Rao's trading and profit and loss account for the year ending 31/12/2011. Here let's write credit. So let me take in the center here. So let me insert the table here. So particulars rupees, So to opening stock, which is given in the problem as rupees 70,000. Then buy sales. So of course we have got here only the credit sales. There is no any cash sales here. So buy sales credit 3,22,000. Then two purchases. So two purchases. So we have given only here the credit we have found here. So there is no cash purchases. So which has come to rupees 2,70,000. 2,70,000. Then by closing stock, so which is given as rupees 75,000. Then wages, two wages. So wages are rupees 15,000. So now let's take the total here. Let's leave a line here. So let's found, I think credit side is more. So total here, that is given, it will come to 3,97,000. So let us write here also total 3,97,000. So the difference here, it will be now when you deduct these three from the 3,97,000, we are going to arrive here 42,000. So this is gross profit. So to gross profit carried down. So now let's continue here. So by gross profit brought down, so which comes to rupees 42,000. So now let us record here the expenses. So to salary it is given as rupees 10,000. Then to general expenses, rupees 8,000. Then to discount allowed, rupees 2,000. Here we have got a discount earned or discount received. So by discount received, because it is income, so which is given as rupees 1,000 here. Then to depreciation on plant and machinery, so the rate of depreciation is given as 10% of rupees 40,000. So that comes to here 4,000. Then there is a RDD. To RDD, which is given as 2% of rupees the closing debtors, that is rupees 50,000, which comes to rupees 1,000 here. So now let's take the total here. Let's leave a line here. So when you make comparison here, so let me board here so that it will not be counted into the total here. So here when you take credit side is more, so total that comes to 43,000. So let me write down here also 43,000. So the difference here, let me write total. Then the difference here is, it will come to rupees, so 18, 20, 24, 25. So when you deduct 25,000 from 43,000, you will get 18,000. This is net profit. So to net profit carried down, in the here you have transfer to balance sheet. So the next one, let me make it a bold here. So the next one, balance sheet as on 31st of 12/2011. So let me insert the table here. Liabilities. So here rupees assets rupees. So here capital it is given as rupees 1,80,000, which is already given in the problem. So 1,80,000. To this add net profit. So we have found a net profit as rupees 18,000. So 18,000. So the subtotal will be now 1,98,000. So 1,98,000 less drawings. So drawings are rupees 5,000, which are given in the problem. So when you take the total here, it comes to, the difference, it will come to 1,93,000. Now cash in hand rupees 3,000. Next creditors rupees of 40,000. We should take the closing value. Then bills receivable rupees 35,000. Then bills payable, which is a liability here, bills payable rupees 25,000. Then debtors rupees 50,000 less RDD rupees 1,000. So the difference here is 49,000. Then we have got stock, that is clothing stock, 75,000. Then we have got plant and machinery rupees 40,000 less depreciation rupees 4,000. So here it will be 36,000. Then we have got building 60,000. Then over now, so let that take the total here. So here it will be in this column. So it is 2,58,000. So total here also 3,000 plus 35,000 plus 49,000 plus 75,000 plus 36,000 plus 60,000, 2,58,000. So the total of the balance sheet is rupees 2,58,000. Thank you.